My name is Sina Amiri, and I'm a senior consultant with Cirrus Consulting Group and today's lecturer. For those of you that have just joined us, you are welcome to post your questions on the Q&A window, which is going to be located on the bottom right-hand corner of your screen. And throughout this presentation, we, unfortunately, given the number of attendees that are on this webinar, over 100, we will not have the opportunity to have audio feedback during the program, so you won't be able to ask your questions through the telephone or the computer, but we will certainly allow you to type those questions, and we will take them as they come. So as I mentioned, the title of this program is How to Avoid Making $100,000 Mistakes in Your Dental Office Lease Agreement. And some interesting statistics with regards to what's happening in the dental industry today. Over 83% of dentists in North America have an office lease that can prevent them from ever selling their practice. Approximately 20% of dentists each year actually lose their ability to sell the practice due to the lease agreement that they have. 3 out of 4 dentists in North America today have an office lease agreement that may prevent them from reaching the end of their careers in their current location, meaning being forced to relocate unexpectedly. Before I joined the webinar, I was speaking with a doctor who is in the process of having her property, the property she's in and is leasing, sold to a different landlord. And her current landlord is not renewing her lease agreement because the plans of the future landlord is to redevelop the property. So more and more doctors today are in a situation where they are forced to relocate to a different space prior to ever retiring in their current location. Some information for those of you that have joined us and have never attended one of our programs in the past. We were founded by dentists, for dentists back in 1994. Today we have negotiated over 10,000 dental office lease agreements over the last 22 years being in operation. And on an annual basis, we analyze more than 1,000 dental office lease agreements. And out of those lease agreements, we negotiate approximately 50% of the lease agreements that get sent to us by your colleagues across North America. And the reason why we only negotiate 50% of the lease agreements that doctors send to us primarily has to do with the fact that not every lease agreement that we review is ideal for negotiation. And I'm going to spend a bit of time discussing the notion of timing your negotiation and why the timeline prior to the expiry date is a critical variable in determining whether or not you are able to successfully renew your lease. And for those of you that are associates that are joining us, this will not apply as much to you, but when it comes time to leasing a space, realize once you are in that space, there's an ideal time to negotiate that lease, renegotiate that lease with the landlord, and we will discuss the timing of that. We deliver over 150 continuing education accredited seminars across the country. We are AGD accredited. We also lecture at various dental conferences. I personally, my colleagues spoke at the Pacific Dental Conference. We've spoken at the Greater New York Dental Meeting recently. The California Dental Association, for those of you that are going to be attending the CDA, we will be there, so you'll have a chance to meet many of our team members. And then also the Ontario Dental Association for Canadian doctors that are joining us now. We will be at the ODA on May 5th through the 7th. And you'll hear us oftentimes through your colleagues that have already had their lease negotiated by us or have come across us through a conference like the ones I mentioned. And we do work with dentists nationwide. An interesting fact is the fact that regardless of where you're located in the country, lease agreements that landlords design are 90% the same. The question is, how much leverage does your landlord have? and how did they structure the terms, particularly for you as a dental professional? Because clearly the lease agreement that you have is not going to be identical to the lease agreement that a national retailer or franchise signs. There's some unique requirements to your operation as a dental office, and hopefully when you've negotiated your lease agreement, you've been able to have that reflected in the legal contract you've signed with the landlord. And to give you a sense of our reach across the U.S., this is a small sample size of the doctors that we have worked with, and these are a combination of doctors who we have advised across the U.S. that have had leases coming up for renewal, doctors looking to build or buy a clinic, dentists looking to retire and wanting to sell their practice. We've also worked on many projects where the tenant is looking to expand or is looking to relocate because the building that they're in is no longer meeting their requirements, or alternatively, they have no choice but to relocate, such as the example of the doctor I gave you earlier, where the new owner of the building is not interested in keeping her as a tenant and is looking to redevelop the property. For our Canadian friends that are on this webinar, our reach also across Canada is quite prevalent. We've negotiated from BC all the way to Newfoundland, and we have worked with a lot of doctors that are in the process of ensuring that they're setting up the lease properly for the first time, so associates looking to lease a space for the first time, as well as many doctors that have already signed a lease. Perhaps they were advised by a lawyer or their accountant or their broker and really don't feel that they have good lease terms. You know, they believe that their rental rate is too high. They feel that the lease agreement doesn't provide them with the type of flexibility that they want as practice owners. Now, what is the purpose of today's webinar? It's purely education. I would say that the primary purpose of today's webinar is for you to understand why the dental office lease agreement is so important. This is not something that is discussed when you're in dental school, primarily because there's so much to learn with regards to the clinical aspects of running a practice that by the time you get to the business aspects, you really don't get a chance to have a deep dive into what are the components that determine the value of your practice and what are the business terms that you need to have in your lease agreement to properly protect yourself from a landlord who really cares about making as much money as possible and increasing the value of their property. We also are going to discuss some of the key terms within a dental office lease. I don't think it would help you all that much if we only spent time discussing the importance of the lease but didn't get a chance to go through the terms, the common terms in a lease. And I'm going to mention 3 terms in particular, and I'll give you examples of what each of these terms are and how they're defined, these provisions in the dental office lease agreement, and what you should be careful of when you're negotiating that lease with your landlord. And we're also going to discuss some practical ideas and really practical advice based on our 22 years of experience negotiating over 10,000 lease agreements so that you can perhaps avoid the mistakes that many of your colleagues have made when they have signed a lease agreement and only found about those mistakes later on when they went to either expand their office, sell their practice, or perhaps take on an associate. Now, what is a lease agreement? I asked this question many times, and I get different answers from different doctors across the country. Everything from it's a contract to it is a agreement that defines how much rent I pay to my landlord. It's almost like a marriage. You know, their lease typically identifies what occurs in terms of what your roles and responsibilities are and what the landlord's roles and responsibilities are as well. And the easiest way I can discuss or define what a lease is the fact that it is a check, right? It's the biggest check you're ever going to write in your dental career, primarily because aside from staff salaries, the second biggest overhead in a dental office is the lease agreement. It's the amount of money that you outlay to build a clinic via leasehold improvements. In addition to that, it's the money you spend every month for the benefit of being able to practice in the medical office building, in the strip plaza, in the shopping center, or freestanding building that you occupy. But unlike a check, a lease agreement not only defines how much rent you pay to your landlord and when you make that payment, it comes with dozens upon dozens of legally binding provisions that do one of two things. They either minimize liability or they increase liability for the tenant. Now, why is this document so important? Well, first and foremost, the reason why you need to have a lease agreement if you're not the owner of the property, even if you are the owner of the property, you should still have a lease agreement in place because you will lease to yourself and there's tax and insurance implications associated with that. But the reason why you need to have a lease agreement is when you get into the office tomorrow, the only thing that allows you to have the legal right to practice in your location is that document that you have, which basically says that you are not to be disturbed as a tenant and that you have the right to utilize the premises Monday to Friday, or for some of you Monday to Thursday, or maybe Monday to Saturday. And this is the document that provides you with long-term stability, right? If you have a lease agreement that is expiring, say, in the next 24 months or 36 months, then how much term or predictability do you truly have? Well, 24 months is all the term you have if your lease expires in 2 years. So what is the guarantee that the landlord is going to renew that lease agreement? And if you're on a short-term lease agreement, you should really pay attention to how much time you have left. The lease should also minimize your risk and exposure. And we talked about the fact that we work with doctors nationwide. The past 2 weeks, I've been in Phoenix, Seattle, as well as Portland. And I can tell you that 75% of the doctors that I met in these 3 cities alone, and I met with dozens of doctors because I was lecturing in these cities, 75% roughly of the doctors that I spoke with have signed their lease agreements personally. And what that means is that the obligation that they have to pay their rent to the landlord is a personal obligation. Okay, if their practice doesn't work out the way they expected and they're forced to go through bankruptcy, or the practice unfortunately doesn't have sufficient ability to generate production to cover the rent expense, because they signed the lease agreement personally, the landlord doesn't care. They've committed to personally make those rental payments, and if their corporation goes bankrupt, they're going to back up the payment of rent, even if it means selling their personal assets. And that's what a personal guarantee, personally signing a lease agreement means to your dental office. The lease should also maximize your flexibility to sell the practice. A doctor who I met when I was in Seattle told me that they were interested in expanding their office, and the space that's available next to them was occupied by a very large bookstore that's basically going under. As you probably realize, what's happening with bookstores across the country, there aren't as many of them as there were around 10 years ago. And in this case, it's an opportunity because now he can expand into the 4,000 square feet that's available. He doesn't want to take all of it, but he wants to take some of it. Now, unfortunately, he doesn't have anything in his lease agreement that allows him to take on additional space at a fair rental rate. And the landlord for this building knows that he desperately needs more space because he wants to expand, and is saying to him, we'll give you the additional 800 or so square feet you're looking for, but it's going to cost you an additional $4 per square foot per month. So he's being taken advantage of because the landlord knows I'm losing a tenant in one side of the unit because the bookstore is going to be closing. And then I have a doctor who wants to expand, and I know he can't go anywhere, so I'm going to offer him that expansion space, but I'm going to offer it at a premium because I need to cover my mortgage. So many doctors fall into that situation where when they're ready to want to expand, they don't have the right provisions in their lease agreement that define what happens if you did want to expand. Are you going to pay a rental rate that's comparable to what you're paying today per square foot, or is the rent to be negotiated by the landlord? The fourth aspect of having a lease agreement and why the document is so important is the fact that you need to have fair and affordable financial terms. And what does that mean? Well, if you're a doctor who's going to be practicing in a space, you want to make sure that first and foremost, your rental rate is comparable to what other tenants are paying. But more importantly, you want to ensure that as a percentage of your gross collections, you're able to meet your rent obligations, right? If your rental rate as a percentage of your gross collection is 25%, that's not sustainable long term, because the average dental practice in the country today has a net profit margin of anywhere between 20 to 30%. So if you're paying 25% of your gross collections towards rent, that is not a sustainable number, because you're going to outlay too much money on rent, which means you're going to have less money to do the things you need to do, such as promoting your practice or paying your staff well so that they can taking care of your patients. And when I talk about fair and affordable financial terms, keep in mind that before you compare your rental rate, you need to understand what type of lease agreement am I going to be signing. Is it going to be a gross lease where I pay the landlord a lump sum amount of rent every month? Is it going to be a triple net lease agreement where I'm going to be paying the landlord a base rental rate plus my proportionate share of the common area maintenance expenses for the property? So that's really the starting point, defining what type of lease agreement you're signing. And then from that point forward, you can determine, based on my expense, is my expense comparable to what other dental practices are paying? Most doctors, by the way, spend more money on rent than other types of tenants, primarily because doctors do not do a good job of negotiating their lease agreement with their landlord. And as such, when they start their practice or when they acquire a practice, they get pulled into a situation where the rental rate that they're paying without the realization is much higher than the market average. And last but not least, your lease agreement should truly enhance your ability to eventually sell the practice. And there is provisions in the agreement that define how and when you can transfer your lease agreement to another dentist or another corporation, or even your son or daughter if you're family, you have dentists in the family. Now, with regards to practice value, since we're on the topic of practice sales, Cirrus Consulting Group, we are not practice brokers. We don't sell practices, but the one thing that we've learned, having negotiated over 10,000 lease agreements, is that many doctors approach their lease renewal around the same time that they're looking to sell their practice. And the reason why they reach out to us is because they want to make sure that the lease agreement is going to ensure the buyer buys the practice. The lease is an inhibitor of the sale of the practice. So when we look at the value of a dental office today, there's really three components to the value of a dental practice. Now, I understand that if you're a general dentist, you're going to have, hopefully, a strong hygiene department, and you're probably not going to be getting many referrals, right? The referrals are received by typically the specialists, like the orthodontists. And if you're an orthodontist or a periodontist, and you're joining my webinar, realize that this diagram on your screen is not proportionate. This is really a chart that basically depicts the fact that if you're a dentist today, the three things that determine the value of your practice if you're a general dentist is the value of your equipment, first and foremost. Then it's the value of your goodwill. The patient charts are going to get appraised if you're thinking about selling a practice. And if you're buying a practice, you're not going to buy a practice necessarily with just equipment and a location. You want to have patients. That's the benefit of buying an existing practice. You want to have patients so that you have cash flow from day one. And then the third component of this practice is the lease agreement. And the reason why the lease is so important is if you think about, if you're a practice owner today, if you think about whether or not you as a practice owner would be able to sell your practice without the lease, think about how many doctors would be willing to pay you the asking price if they had to relocate your office after acquiring your practice because the lease agreement was too short, or maybe the landlord decided to redevelop the property. Whatever the reason is, there are very few doctors today that would buy a practice if they did not have a long-term lease agreement in place. Now, let's assume that you were able to, as a seller of a dental practice, you were able to find somebody naive enough to want to buy your practice despite the fact that the lease term ends in the next few years. It's a short-term lease. Even if that person wanted to buy the practice and they really loved the fact that you're a successful dentist and you have 2,000 active patients, when they go to the bank to obtain financing to acquire a practice, they're going to be surprised to find out that the bank wants a long-term lease. Why? Because when they're looking at providing a loan, they're going to amortize the loan over the duration of the lease term. So if it's only 3 years, it makes it very difficult for the client, the doctor buying the practice, to repay the debt. So this is a requirement that many financial institutions also outlay, that many doctors who are selling their practice are not aware of. And you don't want to have a situation where you've already listed your practice and then you're having difficulty selling it because the buyer is telling you they can't obtain financing to acquire your office. As far as the sale of the practice is concerned, there's a key provision in every single dental office lease agreement that dictates whether or not you have the ability to transfer your lease agreement to a third party. And that's called assignment. In some cases, it's referred to as the transfer clause. And usually when you look at your lease agreement, you'll see it under the heading assignment and subletting or assignment/transfer. And assignment clauses are found in 75% of dental office leases. If your lease agreement does not have an assignment clause, what it means is that your lease agreement is non-assignable. Now, when there is an assignment clause in the lease agreement, what occurs is the landlord designs the assignment provision in such a way that financially benefits them. So, for example, the assignment clause you see on your screen was directly taken from one of our clients' lease agreements prior to us negotiating it. And what it says is that when you decide you want to transfer the lease agreement as part of a practice sale, first and foremost, you need to obtain the landlord's permission. And then within 15 days of notifying your landlord has the option of either terminating your lease agreement or revising the minimum rent to be paid during the remainder of the term to be the greater of the then current market rent, or 15%, whichever is greater, meaning if the market rates in the area have gone up 17%, you're going to pay a 17% increase in rent, assuming your landlord doesn't terminate your lease. Now, many of you may be shocked to hear that the landlord in the lease agreement, if you choose to transfer it, has the right to terminate the lease instead of agreeing to a transfer. And you may wonder, why does the landlord care that I'm selling my practice? Why would the landlord turn around and terminate my lease agreement because I've requested for the lease to be assigned? The way the landlord looks at this transaction is very simple. You are looking to exit as a tenant, and what you've done is you've found a tenant who's willing to take over the space from you because they're going to run the practice. And when that happens, the landlord realizes that the contract they've had in place with you should get ripped up because they can negotiate now a far worse contract with a young associate who has very little experience and will probably sign whatever document they place in front of them. Now, the problem is that associates today, when they're valuing a practice, aside from making an offer, they're sending all the documents to their lawyer. So what occurs is, at some point through the process, the person representing the buyer says, wait a minute, the lease agreement that the landlord has presented my client is not as good as the lease agreement that the current tenant who's looking to sell her practice has. And in fact, not only is it worse than what the seller has, the landlord here is actually asking my client to pay a 17% premium in rent because of the fact that he's young and he's experienced. So from that perspective, having a poorly designed assignment clause can kill a sale. We've had associates walk away from buying a practice primarily because the deal they're going to get from the landlord is not the same deal that the current tenant, the selling doctor, has had in place for many years. And landlords are not worried about having a dental office become vacant because in most markets, if they scare away the buyer, what happens? Well, they can terminate the lease unless you rescind your request. And if you choose not to continue practicing dentistry in that building, they will list the space as a fully plumbed out dental office, and they'll eventually get an offer. And that offer is going to be likely at a higher rental rate than what you've been paying, because some associate somewhere else wants to occupy that space knowing they're going to save themselves $200,000 in build-out expenses. Now, the other provision I'd like to bring to your attention is the landlord's right to relocate the premises. And we have a number of doctors that have joined our seminar, and they're located in an urban area. Relocation clauses are very common in urban shopping centers. They're very common in highly dense markets where you have a lot of development happening. And the relocation clause basically allows the landlord to relocate you as a tenant somewhere else in the building or the property. And generally, the landlord doesn't pay for the relocation. When they do pay for the relocation, they're only going to cover the physical expense of moving your dental gear to the new space, even if the new space is not yet plumbed out and finished as a dental office. In fact, I was talking to a doctor earlier today, and he said to me, Sina, I want to start a second practice. He's an existing practice owner. He's looking to open up a second office. And he found a plaza that's going to be under construction. The possession date is about 2 years from today. And he said to me, the landlord presented me with an offer that I'd like you to have a look at. So I looked at the offer, and the rental rates were about $40 a square foot per year. And in the letter of intent, what it stated is that the landlord has the right to relocate the tenant so long as the landlord provides the tenant with 60 days notice. And if the landlord chooses to relocate the tenant, the landlord is only going to provide the tenant with a maximum of $1,000 for the cost of the relocation. Now, I don't know about you, but I don't know of any dentist that can relocate their practice for $1,000. That's not even going to cover the cost of changing your stationery and upgrading your business cards and your website. So from that perspective, realize that landlords generally designed a lease agreement to have maximum flexibility, and a relocation clause in a lease agreement is not a positive provision to have. The third provision I wanted to discuss with you is what's called an option to renew. So what's an option to renew? The option to renew is the option, as it says, for the tenant to extend the term of their lease agreement. And the key word here is option, meaning if you have, say, a 5-year or 10-year lease, and by the way, I recommend a 10-year lease with at least 2 options to renew, ideally 3 options to renew the lease, for a period of 5 years each, thereby giving you a total of anywhere between 20 to 25 years of predictability. Now, when you have an option to renew, the option to renew is an option, meaning you don't have to exercise it. So for those of you that don't like the building you're in, don't like your landlord, and really want to relocate, you don't have to exercise the option. But when you do exercise the option to renew, generally the lease agreement defines what occurs if you exercise the option. And in every single case, when you exercise the option, the landlord doesn't lower your rent unless there is language in your lease agreement that says you deserve lower rent if you renew the lease. In fact, most lease agreements state that if you renew the lease agreement, in no event will the rent go down, number one. And then number two, there is a deadline for exercising your option to renew. And in this example, the deadline is 9 months prior to the end of the term. Meaning if you send a notice to your landlord and you send a notice 8 months prior to the expiry, you've just lost your option to renew. And landlords intentionally create a deadline for exercising the option because they know most tenants, unfortunately, most dental tenants, miss the renewal deadline. So what happens is, and many of you expect your landlord to call you when your lease is coming up for renewal. That doesn't happen unless the landlord is desperate because the building is half empty. So from that perspective, the landlord, once you've missed your option, at that point can negotiate whatever rental rate they like, and with 9 months of remaining or 8 months remaining term, it's very difficult to now move your office because you got to find a location to move to. If you don't like the rental rate that your landlord is offering, you got to make sure you get the permit from the city to build the dental office. You got to go through the construction and design process, and then you got to move your equipment into that space. And that process can take anywhere from 6 months to 3 years, depending on the neighborhood you want to be in, because some neighborhoods don't have as many locations available, prime locations for a dental office. And downtime for a practice is a huge killer. Now, there are other important provisions aside from the assignment clause, the option to renew, and the relocation clause. And one of them I'll just bring to your attention is called demolition. And what demolition provisions state is that if you're a landlord, generally this is what they state, if your landlord has the intent to demolish or renovate, substantially renovate the property that you're in, they can serve you with a notice of termination. Now, many landlords utilize the demolition clause because they want to have the ability at some point into the future, despite the fact that they've signed a 10-year lease, for example, with you, they want to have the ability to spend money on their building, and if that requires you to move out of your space so they can renovate the property, then so be it. So having a demolition clause in the lease agreement, you got to understand how it's stated in your agreement, and if you have it, it's ideal to try and remove it from the lease. If the landlord is not willing to remove it, you want to have an extended notification period. So instead of getting 30 days or 60 days of notice, ideally you get a year's worth of notice so that you can plan accordingly and have a contingency plan in place. Now, we talked a lot about what you should have in your lease agreement and what you shouldn't have in your lease. And the question I often get asked is, Sina, when I'm looking to negotiate my lease agreement, what are my options? The first option you have is to work with a realtor or broker. And many of you who've signed a lease agreement, if you think back to who you used to negotiate your lease agreement, you may have worked with a broker or a realtor. And the broker who you worked with probably did a decent job of finding a location for you. Otherwise, you wouldn't have constructed your dental office. But when it comes time to understanding what the legal consequences of your lease are, they likely didn't draw your attention to the provisions I just discussed. They may have discussed rental rates and financial terms, but they didn't take you through the legal terms within your agreement. And so when it comes to reviewing the legal side of the contract, the lease agreement with your landlord, it's important to have somebody who can understand that. And really, the other option you have to work with is working with a lawyer. And the skill sets of the lawyer and the skill sets of the broker are actually complementary. What happens is the broker can negotiate the rental rates, and then the lawyer can pay attention to the legal terms in your contract. And some of you may be using both right now. Some of you may have a realtor or broker who's negotiating rent, and you've sent your document over to your lawyer to have a look at prior to signing. Now, we realized over 20 years ago that the model for negotiating a lease agreement for a dentist is broken, primarily because the interests of the broker and the interests of the attorney are at opposite ends. How do brokers get paid? Real estate brokers get paid a commission by your landlord for negotiating your lease agreement. Oftentimes, a broker will show a doctor 3 or 4 locations and will expect that a doctor will eventually sign one of the lease agreements that is presented to them. Now, if your attorney tells you to pass on every single location that you come across because he thinks the contract is too risky, then that doesn't really help the broker because the broker's livelihood is dependent on you signing a lease agreement. So we found that the interests of the broker and the lawyer in these transactions were not aligned. And what we decided to do is combine the expertise of the broker and realtor under one roof and make sure, though, that whomever is negotiating the lease agreement is not being compensated by the landlord. And that really ensures that the person who's negotiating your lease agreement is isn't in a conflict of interest situation, right? They're not going to ask you to sign a lease agreement because they think that it's the best deal you can have. At the same time, they realize there are terms in the agreement that are not going to be positive for you in the future. So with regards to negotiating a lease agreement, you have a lot of options. The key is to make sure that whomever is representing you, number one, is not getting paid by the landlord, and number two, if they are getting paid by the landlord, they make it very transparent, and ideally you pay the fee for them to negotiate a lease agreement, and you'll realize substantial savings on rent, by the way, if that occurs, primarily because landlords, especially on a lease renewal, are not very keen on having a negotiation conducted with a broker who's representing you because that's going to cost them money. Now, with regards to negotiating a lease, what is the ideal timeline? Regardless of whether or not you use a broker, a realtor, or Cirrus, what is the ideal timeline to negotiate a lease agreement? The ideal timeline to negotiate a lease is approximately 24 months in advance of the expiration date of your current term. Not your option to renew. Do not count your option to renew as part of your remaining term. So if you're an existing tenant, the ideal time to negotiate is roughly 2 years prior to the expiry. Now, the reason why we say 2 years is because we know from our experience that the average negotiation takes a minimum of 50 hours. And what happens is when you start the process with 3 months of remaining term, anything less than 2 years, you are rushing through the negotiation process. And also the landlord realizes that because you're now close to the expiry of your lease term, if they present you with a rent increase, what is the likelihood that you're going to move your office? It's low if your lease agreement expires in, say, 12 months. So by starting the process 2 years in advance, that allows for a full year worth of negotiations, and then in the event you're unable to negotiate the lease agreement, you can execute a contingency plan so that you're not into a situation where you have downtime. If your lease expires in more than 24 months, there's nothing that stops you from contacting your landlord and renewing earlier than 24 months. Now, we know from our experience that most landlords start negotiating approximately 24 months in advance, but if you have a lease that expires in 2.5 years or 3 years, again, it doesn't mean that you cannot start the negotiation process now. Better to start the process early than to wait, like most of your colleagues do, until the lease agreement has less than a year remaining term, and then be shocked to find out that your rental rate is going up substantially. Now, with regards to negotiating the lease agreement, we follow a 7-step process, and you can follow the same step that we take. The first step in our process is we want to gather all the right documentation, and you'd be surprised how often your colleagues negotiate a lease agreement and they don't even have an executed copy of the lease agreement in front of them, right? If you pick up the phone and call your landlord and you haven't fully read your lease agreement and you know for certain that that lease agreement was the lease agreement that the landlord signed, meaning their signatures on it, what are you negotiating? We've had situations where a doctor sends us their lease documents and they're missing an amendment or two. It could be very important for us to get those amendments. Why? Because in one of those amendments, there could be a sentence that completely changes the way in which we negotiate the lease agreement for the client. After gathering all the right documentation, we review the lease agreement, and in your case, you want to take 3 highlighters, you want to go through the lease agreement line by line, you want to identify the clauses, and if you don't understand what the clauses mean, contact somebody like us so we can walk you through what your lease agreement says. And that way you have a clear idea of where the risks within your lease agreement lie. And the best piece of advice I can give you is read your lease. Don't just look at the rental rate and the term. Read it from cover to cover. After reviewing the lease agreement, you want to conduct some market research. And by this I mean looking at rental rates, looking at vacancy rates. Is your building 25% occupied? Is it 50% occupied? What is the occupancy rate? As far as rental rates, how does your rental rate measure up to other tenants in your building and other tenants in other buildings that are similar to yours? if you were to move your office, what's the price per square foot for another space? Does it make sense to move your office? Is it going to be more expensive once you factor in the cost of leasehold improvements? It often is. So take into account what's going on in the local market as it relates to rental rates and vacancy rates prior to contacting your landlord. After conducting some research on rental rates and vacancy rates, you want to start developing a plan for what you're trying to achieve. Now, what I recommend personally to a 55-year-old doctor is very different than what I would recommend to a 32-year-old doctor looking to build a practice for the first time. And so part of this process entails us determining what's important to you. And if you're like my client in Texas who is undergoing chemotherapy, what's important to him is making sure that he can spend time with his family. And the lease agreement he has all of a sudden has become a burden because why? He has 4 years of remaining term, so we got to figure out a way to ensure that he can transition and sell his practice without any ongoing liability. After we've developed what's important to us, we want to prioritize what we're going to negotiate with a landlord. The worst thing you can do after listening to this webinar is contact your landlord and send your landlord a laundry list of changes that you want in your lease agreement. And if you do that, the landlord is going to probably respond to your letter or email, and they're going to say no to each of your requests. Why? Number one, you've asked for a lot. You've not prioritized what's important to you. And then number three, what occurs when you send a landlord a laundry list of items is the landlord looks at that list and says, what am I getting in return for giving you the flexibilities that you want and the rental rates that you want in your lease agreement? So what we do to make the negotiation successful is instead of focusing in on immediately on what's important to you, when we're engaging the landlord, we already have identified what's important to you through the planning process, but when we contact the landlord, we don't discuss the legal changes right away. What we discuss with the landlord is the terms, the financial terms of your lease, meaning how much rent are you going to pay to your landlord over the next 5, 10, or 15 years. What is the term of the lease? Is it 5 years? Is it 3 years? Is it 10 years? And by engaging a landlord in a conversation about term and rent, we get the landlord engaged because every single landlord wants a long-term stable tenant unless they're looking to redevelop the property. And they want to know how much rent they're going to get paid over the life of your tenancy. And so once you've negotiated the rental rates, it's a lot easier to now negotiate the legal terms within your contract. But realize that the two, the financial terms and the legal terms, go hand in hand. If you have a lease agreement and you're paying $10 less per square foot per year than a doctor across the street, but your lease agreement has a relocation clause and your lease agreement doesn't allow you to sell your practice, then you really don't have a good deal. You're sacrificing a short-term gain for long-term pain. After we've negotiated the legal terms within your dental office lease agreement, the last step is to obtain a final copy, a final draft of the lease agreement, and sign it. Now, before signing a final copy of the lease, you got to make sure that everything you've negotiated over the past 6 months is properly addressed in your lease agreement. And the best piece of advice I can give you there is when you get the final copy of the lease agreement, don't just assume that everything that you negotiated throughout the last 6 months is reflected in that document. Reread the document, go back to the original draft of the lease agreement, go back through all the steps that you took to get to where you are today, and ensure that everything you've asked for is accurately reflected in that final document. I've had clients that prior to contacting us had their lease negotiated and they thought they had exclusivity. But when they sent me their lease and I said to them, you don't have exclusivity, they said, I thought my lawyer asked for that. I said we had agreed on that and the landlord had given me exclusivity to be the only dentist in my building. So the doctor would then go home, read their lease, as I would recommend, because they're shocked the exclusivity isn't there, and would call me the next morning and say, wow, I can't believe that I signed a final draft of the lease agreement which was missing the exclusive use clause that I so desperately wanted when I moved into this building. So don't just assume that the landlord is going to ensure that every single item you ask for is reflected in that document. It's up to you to conduct the proper due diligence to make sure that document is fair to you and your practice. And the key takeaways from today's webinar, number one, you want to understand the details of your dental office lease, because those details, the devil is in the details, can cost you hundreds of thousands of dollars if left alone. It's not just about rent. Rent is very important if you're building a practice, if you're buying a practice, if you're an existing practice owner, but it's not the end-all be-all. You need to take into account what risks you're taking by signing a lease agreement. It's really about minimizing your risks, maximizing your flexibility, and hopefully increasing practice value so that when you sell a practice, you're able to sell it more over that period of time. And you also want to be strategic. You know, negotiations, you don't get what you deserve, you get what you negotiate. If you don't ask for a change, your landlord isn't going to give it to you. And many colleagues of yours that I advise had the initial mindset that my lease is negotiable. Landlords don't negotiate leases. I'm just a dentist leasing 1,500 square feet. And they're surprised after we contact the landlord how much the landlord is willing to change their standard firm lease agreement. Why? Because there is no such thing as a standard firm lease. The landlord tells you it's a standard firm lease agreement because they hope you don't negotiate. You want to start the process early, so the ideal time, as I mentioned, is at least 24 months in advance if you're an existing practice owner, 24 months in advance of your lease expiry, not taking into account your option to renew, because if you exercise the option, that's typically designed to benefit the landlord and not you. And you also want to do your homework. You want to plan for the negotiation. And really coming on to this webinar is a good starting point for planning your future. With regards to how we can help you, there are doctors that have emailed me and called me even before the webinar began and asked me, aside from educating them on the lease terms, would it be possible for us to review their lease? Now, we do have a limited number of resources available, so we can't, unfortunately, since there's over 100 doctors that have registered for this webinar, we cannot offer every single person a lease review. But what we can do is for the first 5 individuals who reach out to us by phone, and my contact information is on the screen, or email, we will do a complimentary review of your lease agreement. So we're not going to charge you for it, whereas most lawyers charge anywhere from $500 to $2,000 to review a lease agreement. We're going to review your lease for free to make sure that you are not put in a situation where you're going to be taken advantage of by your landlord. Now, you choose to do what you want to do with that advice. If you decide to negotiate the lease yourself, negotiate the lease agreement through your attorney or your broker, that's completely up to you. But our goal is to make sure that you understand prior to making that decision what you're about to negotiate, what your lease agreement says, and what you're about to get into prior to proceeding, to avoid the $100,000 mistakes I discussed. And with that, I'd like to take some questions. So what I'm going to do is I'm going to hit the poll here and get an idea of how many of you that are attending today's webinar are associates versus looking to buy or build a practice, or have an existing lease agreement you're looking to negotiate. And then if you have questions, please utilize the right-hand corner of the screen for entering your questions, and I'll try and take as many of them as possible tonight. And if I do not address your question because I didn't get around to it, please feel free to drop me an email or give me a call, and we will address those questions one-on-one. Okay, I just got a question via email. A doctor's asking me, so the lease that they have apparently is going up for renewal in the next 6 months. The building has a lot of vacancy. Can I expect a rent? It sounds like the doctor's asking whether or not they can expect a rent reduction. My answer is it depends. Okay, if there's a lot of vacancy in your building, yes, theoretically you should have a rental rate that reflects the fact that your landlord isn't providing you with a space that's fully tenanted that may have impact on your business. That's theoretics. But when it comes to negotiating a lease agreement, you have to realize that if your landlord is suffering because they can't lease the entire building, chances are they're depending on you to pay their mortgage. So in not every instance that we come across, does a landlord offer a rent reduction. In many cases, the landlord offers a rent increase because they realize that they're only relying on you to cover their mortgage expense. So it depends. I'd have to look at the lease agreement. I'd have to look at the city or neighborhood you're in to determine, and your landlord to determine what makes sense. But absolutely, I mean, we want to leverage that information when we're negotiating a lease agreement. Rent versus buying, excellent question, Sarah. So do I rent or do I own a property? The answer is it depends. I'm working right now with a doctor. They have two practices. And one of them, they own the space. The other one, they lease the space. Now, how did they get into that? Well, the locations that they found to build their clinic, one of them was available for lease. The other one, which was ideal, was available for purchase. Not every single location that you come across that's ideal for building a dental practice is available for purchase. Strip plazas, if they're up for sale, you're looking at typically a higher amount of investment. So determine how much you're willing to spend, right? Is it $1 million? Is it $300,000? Is it $5 million? And then determine how expensive is it to buy real estate. And can I get approved for a loan? Some of you who are associates may not be able to finance both the build-out as well as the acquisition of the property that you're interested in. Maybe it's going to cost you $400,000 to build out the practice, buy equipment, and then it's going to cost you another $2 million to buy the property. And the question is, do you want to necessarily put all your eggs in one basket? Some doctors it makes sense, other doctors it doesn't. It depends on your finances, depends on how much debt you're taking on. And so we do have a guide available for doctors that are considering buying versus leasing. We don't have a personal preference, meaning whether you own your property or you lease it, we think you should still have a lease agreement in place for tax and insurance purposes. And if you decide to buy a property, make sure that the property doesn't have any building code issues. Make sure that you're not having to invest a substantial amount of money in the property because if it requires a lot of renovation or a lot of work or maintenance, that may take away from your job as a full-time landlord. And then number two, is the property multi-tenanted? Are you the sole tenant in the building? Is it a freestanding building? It's a house? Or are you going to be dealing with co-tenants? And then who are those co-tenants? Can you manage their expectations? And do you want to be a part-time or full-time landlord? Is that something that is attractive to you? Would you rather focus your time and energy on the clinic and reinvest the capital back into your practice versus back into the property? And if you think about this, more than 90% of the national retailers do not own their property. There's a reason why the most successful retailers in the world choose not to buy the property that they occupy. That has primarily to do with risk, number one, and also is not generally the core focus of the retailer, right? If you think about, for example, the Gap, there's a reason why they chose not to buy the property. Imagine having bought all the properties and having to then shut down the stores in addition to selling off the buildings for half of what they were worth. Because the practice, or in this case, the retailer is no longer in that space. So I would want to speak with you one-on-one if you're thinking about buying a property to figure out what your financial situation is and then determine what makes sense for you. And we've had doctors, clients of ours that have bought properties successfully and they made the right decision to buy versus lease because that was the right decision in that particular instance, given all the variables that we looked at. So I have a question here, and not much of a question, but more of a statement. So negligence clauses. I don't know what you're specifically referring to when you say negligence clauses. What I will tell you is that in the lease agreement, and I think this is maybe where you're getting at, there is language in lease agreements that states that, for example, what occurs, okay, if you don't end up carrying out your obligations. Usually in the lease agreement, there's a section called default. And the default provisions in the lease agreement identify what occurs in the event you don't pay rent, what happens if you don't repair the HVAC unit, if it's your responsibility. So I would want to have an understanding of, in the case of the doctor that asked this or made this statement, what your specific situation is, so I can determine how the lease agreement will address your concern. If your landlord, by the way, isn't carrying out their end of the bargain, so you feel that they're being negligent, whether it's maintenance of the property or maybe you had a patient slip and fall outside because of something that the landlord did or didn't do, you want to make sure you clearly have in place provisions that allow you to escalate the matter and ensure that your liability is reduced because of the landlord's negligence. So I will take that question further offline if, Greg, you're interested. And I have another question here. How do I determine whether or not to renew the lease or relocate? So for some of you, and this question may come from or stem from the fact that you're not necessarily sure whether or not you want to stay in the building given the history of the building or perhaps your relationship with the landlord. And what we do for a lot of doctors is we evaluate both options simultaneously, meaning there's nothing that prevents us from contacting your landlord and having a conversation with regards to renewal of the lease while simultaneously evaluating prospective locations to determine, if there's a property available, what is the rental rate for that property, how much money is that landlord willing to give to you. And many times what ends up happening when we do that is the current landlord realizes we've done our due diligence and they end up offering a better deal than they would have otherwise. Because a lot of doctors, they don't want to do the research. They contact the landlord with regards to the renewal, and the landlord knows you don't know what else is going on in your market, so they offer up a rental rate and a lease term that's not as favorable. It would have been a lot favorable to show the landlord that you know that there are other landlords that are offering a lower rent or better lease terms and use that to your advantage. Now, we do have a number of white papers that are available for download. So we have some information for property owners, a dental practice startup guide that we developed for doctors looking to start up a practice. We have a dental practice expansion guide, a guide on renewing a lease agreement, and some general information regarding relocation, and then a guide to buying a dental practice. So feel free to download any of these PDF documents, and these guides are 100% free. So have a read through them. If you have any follow-up questions, again, please do reach out to me, and we'll do our best to get around to your questions. And with that, I'd like to thank everybody for taking the time to join today's webinar. I hope that you found it very informative, and I wish you the very best in your journey as a practice owner.